Should we go into a worldwide recession?
Well, I'm not an economist, but I think so. But again, these numbers don't portend very well.
Morgan Stanley and UBS just downgraded their year-end calls. Morgan Stanley downgraded $5 to $95 per barrel for Brent. UBS downgraded $15 to $110 a barrel for Brent. Both of them citing recession, not necessarily the U.S., but more global issues, especially when it comes to China and lockdowns there.
We've got quantitative tightening. We've got M2 growth coming down. That's going to mean GDP growth is coming down. We've got earnings estimates that are supposed to be lower. So we don't see a recession this year, but we do think combining that with lagged effects, you're going to see recession probably in 2023.
Then, okay, that could be different. So I'm looking at that. I'm looking at the dollar. I'm looking at the bond market, looking at gold, looking at crypto. So there's a lot of things to look at.
U.S. markets slumped again as traders continue to fret about a global recession and a concerning inflation outlook. USA CPI inflation kind of showed a slight chance of slowing down last month, but the recent CPI report remains uncomfortably high for traders who are still expecting significant increases in interest rates. In this video, Raoul Pal discusses the key takeaways of where the market could go over the next 12 months. He also explains if there are triggers of global recession or not. So stay tuned till the end to know his viewpoints of what's really going on, and more importantly, where it's really going on too. So let's dive into the video. But before that, don't forget to subscribe to my channel for more videos on the crypto market and economy.
Markets have been thrashing around trying to digest news flow, which is always why I've said be careful of trading geopolitics. But there are more structural things going on that are interesting. Obviously, equities are still in a bear market. Whether they're trying to find a low or there's something bigger, we don't know yet. My thought process is it's probably more likely to be getting closer to a low. But if we start playing out the full recession card, then, okay, that could be different. So I'm looking at that. I'm looking at the dollar. I'm looking at the bond market, looking at gold, looking at crypto. So there's a lot of things to look at. I can't see how you can get interest rates to rise more than 50 or 75 basis points before you've actually created a recession. So that makes you think that if that's the case, that the forward-looking indicators suggest that there's going to be a potential recession ahead, then normally demand destruction comes. Along with the rise in prices causes demand destruction. The answer to higher prices is higher prices, is an old commodity market saying. So therefore, bond yield should come off.
Markets have been thrashing about to digest the news flow. You see, a lot of things are happening. Inflation, volatility, bear market, Fed rate hikes, confusion and fear in the minds of everyone. So what's really the big picture? What's really happening in the market? Or should we say, where is it going? Are we entering a global recession or what? I mean, inflation worldwide has been rising at the fastest pace in decades, due to supply constraints amid high demands as countries emerged from the pandemic, and exacerbated this year by the Russian invasion of Ukraine and COVID lockdowns in China. Even the World Bank warns of recession risk rising amid higher interest rates. Many countries will not be able to avoid a recession, but the world's slowdown and tightening monetary policy could give rise to significant financial stress and trigger a global recession in 2023. Let's hear what Raoul Pal has to say on this matter.
Our job is to live in the future, and we need to understand where the future lies. So Stan Druckenmiller importantly said that the job in macro is to see 12 to 18 months out, because the asset markets tend to price the future. So right now we can hear people all on Twitter saying, we're going into a recession. It's clear there's going to be another leg down in equities because they need to price in the recession. That's assuming that everything operates in real time, but it doesn't. So when I look at the year-on-year rate of change of, let's say, the NASDAQ, and compare it to the ISM index, which is my guide to the business cycle, the Institute of Supply Managers survey, it suggests that the ISM survey, the NASDAQ is pricing in ISM at around 40. ISM at 40 is relatively deep recession. ISM at 47 is usually a recession level, and 40 is something, to the order of magnitude of kind of negative 2% GDP growth. So it's already priced in. The S&P is similar. Things like copper are close, oil less so, but coming down over time in line with the business cycle. The exponential age stock, so the long end of technology, the ARK style investments, they priced an even deeper recession. So they got down to about 35 in the ISM, which was very, very low. So I think the market's discounted this already mainly, and that the low potentially is in, because what will be happening in 12 months' time? In 12 months' time, we will have seen a recession and we will likely be coming out of it. Whether we're fully out of it or not, doesn't matter. A recession at some point in the future means that the Federal Reserve will stop hiking and will stop shrinking the balance sheet. And they will probably go towards cutting. In the future, in 12 months' time, the probability of inflation being, at 8% is extremely low.
According to Raoul Pal, we should be looking at where the future lies in the next 12 to 18 month time period. Fears of a global recession and concerns about the overall weaker outlook mean that investors are even less keen to buy the dip. So what should you do in this market environment? What are the key takeaways? Is it time to buy the dip? Let's get into the next clip and hear what Raoul Pal has to say on this matter. But before that, don't forget to hit the like button.
Where do you see crypto going right now?
So in answer to right now, I don't know. The chart looks like it wants to go lower again and have another spike low. And that's been my view for a while. The key takeaways is this is a really complicated situation. The geopolitics are terrifying, saddening, complex. The markets themselves are caught between that, inflation, a tightening Fed, slowing growth. It's a very complicated world. This is not the time for widows and orphans. This is not the time to make big bets, because this is the time you'll get carried out. So be very careful in what you do. Manage your risk very carefully.
Bitcoin showed bearish signs below the $20,000 support zone against the US dollar lately. Bitcoin price remains at risk. Not only this, Ethereum also saw a major bearish reaction below the $1,500 support, even after the merge. Raoul Pal advises everyone to manage their trade with care. So what do you guys think? Are you in the selling boat? Are we entering a global recession? Can it affect the Bitcoin prices? Can cryptocurrency prices plunge more ahead? Share your thoughts in the comments below. And if you find this video informative, be sure to give a big thumbs up. For more videos like this, don't forget to subscribe. I'll see you in my next video. Adios and thanks for watching.